Hey traders, Cousin Benny coming to you with the next video in the series How to Become a Better Trader. I believe this is number 4. This technique is basically what I call the box, and I use the 10 period EMA and the 30 period MA, and this basically is based on Ichimoku charts if you are familiar with them, in that the periods are 9 and 26, basically the same, I believe, as the default on the MACD. So to start, you set your platform up for a EMA, shorter term EMA, and the 30 period moving average. And the object is, once a position or pulls back into this zone between the two, that sets up a buy. And what you look for is your first green candle once you get back in here. You can also buy off of a pullback to the 30 period moving average and a 3 candle reversal. But for the most part, the easiest way to trade this technique for new traders is to buy when you see the short-term exponential moving average and the 30 period moving average create a zone in here. Okay, you buy the first green candle, so you have a green candle here, you'd have bought this rally. Green candle here, you would have stayed with this trade and you would have made a nice profit before you saw this candle where you would have gotten out because of the selling inherent in this stick. And also, again, here our latest trade, which is a 3-day swing on Yahoo, which is doing quite well today. You should be taking profits. This is a chart of triple D, 3D systems. This basically will show you, one, that we have a 10 period, 30 period cross today. Alright, so what we're going to be waiting for is what we saw here, which is the first cross of the two EMAs. You wait for your first pullback before you buy. And then you had 4 zones here where you could have bought the pullback and rode this trade higher. So for now, we're not in this trade, but we're waiting for the first pullback into this new trend change on 3D systems. Southwest Airlines was another trade that set up last week when HCPG noted that the IYT, which this is a component of, had a reversal candle, which is this one right here. So immediately I started looking at the components of the IYT, and I saw LUV and a nice setup. It was the box right here, very similar to these other two, and we're waiting for a nice trend higher in which to take profits. I might take some profits today, given where the S&P 500 is currently at all-time highs. Celgene is another example where we had a strong trend, and we have the crossover right here of the 10 period EMA and the 20 period. So that starts your pattern at this point. What we look for is a pullback to the 30 period or inside the box. In this case, we went a little past that and we waited for our first green candle to get long. And obviously, there's always a possibility this could continue lower. So what you do here is you put a stop in wherever you feel comfortable and you trade accordingly. But in this case, we did reverse. So in hindsight, you can say, yeah, well, I can see how that develops, but if you don't believe this technique works, look at Ichimoku charts, also chart some of your own charts, and you'll see that on the stronger trends, both long and short, you can use this technique to swing positions for quite some time. So you can see Celgene is taking off again. So it came here and tested the 30 period, and it's off to the races. This is using a different technique, the notations I have on here for basing and whether a stock is basing and trending. And I think that is the video I did just previously, video number 3 on how to become a better trader. Now here is a bearish case. Alright, so here's our crossover right here of our 10 period and our 30. We wait for our first retracement. You could have traded this, but for using this particular technique, we wait for our first pullback to the descending moving average, 30 period. We're in the box zone here, and we look for our first red candle off of this area. So that's the candle we got here. You may have gotten stopped out on this particular one, but you may have got back in the trade if you got stopped out if you got in the day previous, and you would have rode this trend down. Okay, so that's US Steel, one of my favorites for shorting, by the way, once it turns over. AMD is another case where we can see the downtrend here. Okay, going back to where we had our first crossover right here. We'll wait for our first pullback into the zone, which is right here. I'm doing this recording on my laptop, so if you hear the clicking, it's because I'm clicking my mouse trackpad. Alright, so there's your first pullback. You wait for your first red candle. You had a nice shooting star here, and you just ride this down until you get a crossover to the other side, but you didn't get that. So you could have gotten out anywhere along here depending on what your trading strategy is, but for using this technique for a new trader to stick with a trend and a trade with the trend, this is a technique you can use. 10 period EMA, 30 period moving average. Okay, CF Industries is another good one. We can see right here we have our crossover of our 30 period and our 10 period. Okay, so you buy your first pullback, which is right here. You could have tried here as well, but this is a first pullback. You would have gotten stopped out. Moving forward, we can see that we had a number of occasions where we could have bought the pullback and had a nice trade in these cases. Now you have your first pullback on a bearish case. Okay, and we start moving sideways. But you did have some nice trades in here. Moving forward, we have another crossover right here. We had a crossover to the upside here, which you really didn't get a good signal to the upside, so we stayed away from this trade. But on this downtrending candle, we got a nice pullback into the zone, and what you would buy is short is the first red candle into the zone. Okay, you'd also look at other things like support and resistance, where you are in reference to previous areas of support and resistance. So you'd have those things going for you as well. But for simplicity's sake, trading this 10 period, 30 period, which I call the box, you can use this to trade as a new trader and hopefully pull some cash out of the markets. Okay, I hope this helps. This is Cousin Benny coming to you from Day Trader Bootcamp, where you can come and check out your free 2-week free trial, and also the closing print. This is my site where I have a lot of educational information similar to what you've just watched. A 30-minute opening range. I have tutorials here as well as some other techniques that you may find interesting if you're a new trader and looking for strategies on how to make money in the market and how not to lose money in markets. Okay, take care. I'll see you in the room.